Thank you, Morrison, Kent, and Clarity Insurance guys for joining us today, and for all our attendees taking the time out of your busy days to join us as well. So some housekeeping, we've got everyone here, attendees, with their mics and cameras off. This is just to ensure that there are no interruptions and minimal distractions while our presenters are presenting. So I can enable the cameras and the mics on at the end if anyone would prefer. So this webinar is being recorded just so that we can share it with our members and anyone else who wasn't able to attend today. If you have any questions, there is a little Q&A tab there up the top next to the chat. So if you have any questions, you can pop them through in there as you think of them, or wait until after the presentations. So we'll be addressing any Q&A or questions at the end of the session. So I do encourage you all to ask any questions that you might have as you have the team here today. So it's a really great opportunity to ask them any burning questions that you have, and they do love answering questions, so fire them through. Alrighty, so I'll hand over now to Morrison Kent.
Thank you, Sarah, and we will just share our screen so you can see our slides. Those who attended the conference will probably recognize, I think you just go window, see window down, yeah, there. You might recognize our slides, so bear with us, we just work through them quickly. But some exciting news from us, just with this cover page. We've been Morrison Kent for a very long time now. We're actually changing name very soon in the next couple of months to JB Morrison Lawyers. So that logo won't be around for long, but not to worry, it's still us that you'll have assisting in the background, and we'll provide a bit more information in the next SANS communications just around the change of branding. But for now, that's the only thing we need to cover there. So a quick rundown of who we are. I'm conscious that we were at conference and we met lots of members there, but there was also plenty who weren't able to attend. So for those who don't know us yet, we are a full service law firm. We've got offices in Wellington and beautiful Rotorua, but we really do have clients all around New Zealand. I was just reflecting earlier, and I think in February I'm managing to get to Hamilton, Rotorua and Auckland, and most likely there'll be a Nelson or Christchurch visit as well. So we move around a lot. So if you're not based in Wellington or Rotorua, not to worry, we can still help. We also make ourselves available however you need us. We can be with you in person, via Teams, over the phone. I always like to joke about sending a pigeon, but we really are, you know, flick us a text message and we'll get back to you. We're not formal, we don't need meetings set up, we just roll with it. And that's how we like to operate with all of our clients, because we know that's how our clients usually need us. When we say full service law firm, if you're lucky enough not to have too many dealings with lawyers often, what we're talking about is commercial leases, construction contracts, disputes with neighbours, employment law. Obviously, I lead the employment law team. We also do health and safety, privacy, a lot of property law, buying and selling houses, wills, trusts. I mean, you name it, we do a lot of Māori land law in our Rotorua office. So if you name it, we probably do it. And it's just a case of working out how we can be helping you. It's actually quite cool to be revisiting these slides since the conference, because I think since we did meet lots of other suppliers and members, we've done some construction contract work, we've done some commercial leases, we've done some wills. I think we've got a couple of trusts in line, and we've done a few bits and pieces for the employment side as well. So we're really seeing other partners as well as some of the members tap into our services, and it's great to be able to help out. The other thing we really wanted to make clear is it's often best not to wait for a dispute to come and have a chat to us. Obviously, if something comes up and you need some contentious or dispute advice, that's what we're here for as well. We're happy to jump in and get amongst it. But often if you can have a bit of a sit down and think about things that could be starting to feel like they're not going quite right, or things you just haven't had sussed in a while. From my area, that might be, how long has it been since your employment agreements have been updated? How are those policies and procedures looking? Do you have any employees who are causing problems? The ones we often see will be absenteeism. We get a few abandonments, particularly in the general construction industry. So if there's some things that are happening, even people just turning up late, those kind of problems, if you let them linger for a long time without dealing with them, can end up costing the business. So that's the kind of thing. If that's raised any alarm bells or made you think, actually, it might be time just to have a yarn about what my options are, that's what we're here for too. You don't need to wait for things to explode. We really like for our clients to think of us as a toe board or your building wrap. I haven't just Googled those terms. As a firm, we really like to get to know our clients, and I've made a pretty big effort, thanks to initial introductions from the wonderful Tina, to get out there and understand what the scaffolding, access and rigging industry is up to, and a lot of the technical terms and how you do things. So I'm going to shout out to Leia. They had me out to their premises and helped me actually build a scaffold myself. I was very slow and not particularly strong, but it was a lot of fun. And the fact that they took their time out of their busy days to help me do that was awesome. The guys at WorkZone, particularly Kurt Simpson, took me up a scaffold, nice high one, confirming I'm not afraid of heights. And that was great too, to actually see the scaffold in practice, understand those risks and why things like toe boards and building wrap are important, particularly when you're a fair way up in the sky. And also a massive shout out to the wonderful Kruti, who I think is here today, who has been helping me out by keeping me in the loop with what's going on at Capital Scaffolding. And we've had lots of catch-ups, and I've seen some really cool projects there as well. So it's been pretty special to get involved with this group of businesses. The generosity that everyone's shared in terms of letting me get to know the ropes as much as some random lawyer from the terrace can, and understand the real problems, understand the phrases and the terminology you guys use. It's meaning that when I do need to help out and give advice, I've already got a bit of a head start in terms of what the problems are. So massive thanks. And that's why we say we want to help prevent the risk, and we're trying to get to know the industry and the business so that we can do that without you having to give us a history of what you do before you get into the issues. Thanks, Libby. So how can we best support? Well, like I've just said, we want to get to know you and your business. Just because I've met some of the members and some of the suppliers and partners doesn't mean I know you all. So if you'd like to get to know us, or for us to get to know you, I'm always ready. I've got my steel caps waiting. I like to borrow hard hats and high vis, but I need to get those myself. So we really are keen to come out. I can also introduce you to the other partners and teams who work in different areas. Like I said earlier, I'm the employment law partner. I like to stay in my lane. But we've got amazing lawyers across the full suite of areas. And again, a lot of the members and suppliers and partners have already met a number of those over the past few months. In terms of when we talk about what we can do for the membership, well, we can advise the business across the board, but we can also assist with personal matters. And the things that really jump out are wills and trusts. If you haven't got a will yet, why not? We all really need one, particularly if you've got property, family members, or even pets you want to look after. Trusts can be a useful thing to do if you're the director of a business. There's obviously the always buying and selling of houses and other properties, and family law. That doesn't just mean divorces and separations, although it can mean that. It can also mean entering into agreements for second relationships, or if you come into a relationship with property and you want to be able to manage how that is dealt with in the event the relationship doesn't continue. Also things like custody of care of children. So there's very little that we can't help with, and as a member you can tap into our services for the business, but also for those add-on pieces of the puzzle which relate to your personal lives. We're very happy to be offering SANS members a 30-minute free consultation, and there's been plenty of those going on around the firm as well, which is great. Just remember to mention that you're SANS members so that the lawyer in charge or who fields the call knows that that's a free call. Thanks, Olivia. So I think I've really covered these things, but again, if you're not particularly used to having to deal with lawyers, we've got a wee list of bits and pieces that we offer. So the construction and property law matters, contracts, property developments and projects, acquisitions, disposals, joint ventures, setting up companies, merging with others. There's the more commercial matters which relate to commercial leases, business structures, banking and finance, additional lending, mergers and acquisitions and developments. The property and residential matters a bit more straightforward, buying and selling of houses, subdivisions, property ownership, and financing, where you're refinancing. Sometimes you need some legal advice around that. In family law, already covered that really. And employment, I mean, it's not quite as simple as everyone thinks, right? There's so many things in employment law. There's the documents, so there's the contracts, there's the policies and procedures. There's making sure that your records are being kept up to date, because there's penalties available if you don't have the right records and the right stuff in them. Then we move into personal grievances. We can help defend against those. We can also help resolve them. Restructures, depending on what happens with the economy, we might be looking at a year of a few more restructures. It makes sense to get those right. One of our newer clients came to us because of just doing a one-day restructure, which resulted in 6 personal grievances. It happens, I get it, it happened during COVID as well, but the amount spent now on resolving those matters would have been a lot less in terms of just getting some advice and probably going through a good process to start with. Performance and disciplinary issues, including behaviours that might have been lingering around for a while now that you're not so happy with. There can be ways to reset expectations and get people up to scratch. There's so many things: medical incapacity, dealing with long-term injuries, dealing with repeated absenteeism. We really do cover all of those bases, and anything employment we can help with. So don't hesitate to reach out, as I said before, if that would be useful. Oh, thank you. Look, I've got a big sign here saying questions, but I thought I'd also just mention a couple of other things since we last spoke in one of these situations. So 90-day trial periods, they're back. The government has put them back into place. I know that lots of the smaller employers within the membership probably already have them, but those of you with 20 or more employees, can now utilise trial periods. The caveat on that, or the loophole, is where it's relating to the work visa side. If you're an accredited employer, you may not be able to use them for those employees. In fact, you can't. So again, if you're interested in being able to utilise trial periods, reach out or check that you can, or check your agreement's compliant. And there's a bunch of other bits and pieces you've got to be careful about in relation to trial periods, because there's heaps of case law that covers the many ways in which employers can get these things wrong, accidentally usually, and then they think they're home free on a dismissal, and it turns out they're not, and that can get painful and expensive. So trial periods are back. That's largely a great thing, but be careful and get in touch if you're going to start using them. There's also been a couple of cases recently that might be of interest. There's been one with a scaffolding company, and that company entered into a record of settlement with an employee who had raised a personal grievance. I won't name names, but it looks like from the case an agreement was reached. It was written down. If you haven't been through one of these processes before, those agreements are usually called records of settlements, and they go off to mediation services to be certified. And once that happens, they can go to the Employment Relations Authority to be enforced if a party hasn't complied. So in this case, the scaffolding company agreed to pay some sums of money to the employee and their representative, and then once those sums were due, just, I guess, went to ground, stopped responding, didn't make the payments. So that employee and his advocate, not lawyer, advocate, took them off to the Employment Relations Authority, and the authority has ordered compliance with that record of settlement. It is enforceable once it's signed, and also a penalty against the employer for not complying, which isn't usually ordered lightly. So that's just something to be aware of in the industry. There's another one where an employee abandoned his employment, kind of like the scaffolding company in the other case. He went to ground and didn't engage with the authority process, having also kept quite a lot of company property after he abandoned his employment. So that also went off to the authority, and again, unusually, because he abandoned, he breached his contract. He didn't return property, so he was ordered to pay a penalty to the employer. That's kind of an unusual case. A lot of times if someone abandons their employment, employers don't bother going after them. There can be really good reasons for that, but it's interesting to see a case in this industry where the employer did actually, on principle, pursue that. So that's just a couple of wee cases that have happened really recently. I think one of those determinations came out end of last year and the other one started this year, Olivia. Yeah. So there's lots of things going on, and again, some of those things probably could have been avoided with a bit of advice or a bit of support. Anyway, we're happy to take questions, but I suspect our friends at Clarity are just itching to do some talking now. And I should apologise for those of you who don't know Olivia. There's Olivia, and
hi everyone.
she's second in command. And look at those fabulous shirts the Clarity boys are wearing. Love them. All right, we will turn ourselves off and look forward to hearing from these guys.
Thank you for the time. We're talking about high cover and a quick intro about who Clarity are. And those that don't know myself or my colleague here, so I'm Jason, this is Chris. We're both directors and owners of the company. And a quick intro about Clarity. Essentially, us as an insurance broker, we're formulated and set up specifically to look after large group national insurance programs. That's our specialist, and we love doing these types of programs. We work very closely with large associations like SANS, but also franchise groups and other industry bodies. And we're very, very privileged to say that a lot of our programs are actually related and reside within the building sector. And we're also part of this amazing network called Insurance Advisor Net. It's a series or group of us brokers that reside in New Zealand and Australia. And it gives us phenomenal leverage. And in fact, last year we just cracked the $1 billion turnover. So that's the total amount of premiums that our group puts together. And it gives us phenomenal leverage with the insurers. So why do we like doing these large group programs as opposed to just individual clients? Well, the two big things is that it gives us phenomenal leverage, and we love leverage because that means we can negotiate a better cover and, of course, much better premiums. But what I also like about it, and whenever we launch any new insurance program with an association body especially, we do a lot of research, sit down with members, with business owners, and actually look at what are your unique risk profiles. And that's how high cover was developed. So we've come up with some very, very unique tailored coverage, policy wordings, and very, very specialist extensions. Last year, some history, we worked very, very closely with SANS, and we did what's known as a soft launch. And we were very lucky that the board members put their hands up and said, we'd love you to review our own insurance program, no promises. And what became very evident is that most of the board members have had their existing relationship with their brokers, sometimes on average 10, 20 years. So we had a very, very hard task to row there, and acknowledging very, very long established relationships. But we went through the exercise, sat down with each board member, and we're pleased to say that the vast majority have joined, and there's just a couple that we haven't had a chance to do a review yet. So for us, that was an amazing process, gave us good feedback, allowed us to fine-tune the cover a little bit more. And I suppose the highlights is that everybody had quite dramatic coverage improvements. We came across some board members which had some exclusions in there which they weren't aware of, some which would cause some problems, so they were removed. They were thankful for us pointing those out. And of course, when it comes down to the premiums as well, I think the average saving for everybody was at least 20%, and there are some board members which had their premiums as much as a 30% reduction. So much so in terms of feedback and positive feedback that they've actually put their experience in writing, and we've put that together and we can help share that later on. So let's talk specifics, and I'd like to hand over to Chris, and he's going to tell you the great detail.
All of the exciting parts that I'm sure you've all been waiting for. So look, as Jason mentioned, part of the process that we go through is a bit of a risk workshop. And so that involves analysing your industry with different sized members of the SANS Association to really understand your complete risk profile. We can heat map it, and then we start allocating all of your risks against the insurance policies, so we can see quite quickly which risks are automatically covered, that effectively left us with what we refer to as our wish list. And these are all the areas of risk that aren't usually covered or not covered well. And that's what we then start negotiating with insurers on to get a more bespoke, tailorized solution that's fit for your industry. So just briefly, if we look at some of the ones that relate to your property side of your risks, theft or non-return, that's of your own scaffolding equipment once it's been loaned out, hired out, or installed on a particular construction site. If it's stolen or if it's not returned by the owner, we've got cover for that underneath there. We've also had feedback that a number of scaffold companies in general tend to insure their scaffold equipment on what we call a first loss basis. So you might, for example, have $1 million worth of gear, but you've only ever going to have 200,000 at any one contracting site. So we have seen some companies choose to insure just $200,000 worth of scaffolding because the cover anywhere in New Zealand rates are prohibitively expensive. So we've been able to get the insurer to provide anywhere in New Zealand cover at a static rate. So the premium is extremely competitive to have all of your gear covered. And we're doing that because we want to try and ensure that you have full cover in place, because we are aware of some members who have had that first loss coverage basis, then throughout the course of the year potentially entered into a contract that required, in that example of say 200,000, required $400,000 worth of gear. They've gone ahead and installed all that and then suffered quite a monumental loss, and the 200,000 limit that they had wasn't adequate to cover all of the damage that they incurred. So we've made sure that the price point's extremely competitive, so you'd be more encouraged to insure at the full value. Employees tools, just a small limit of 5,000, but again, we're aware different operators have different processes, and so some of you may provide your employees with tools, others may expect the employees or they may be contractors to use their own tools. Just for the sake of convenience and relationship there, we've just made sure there is cover in there for employees' tools, so if the worst case happens, they've got some cover under this policy, and it doesn't create some kind of a personal grievance that sees you going back to test at Morrison, Kent. Higher transit limits. This is really so you've got cover for the gear whilst on the back of your trucks from site to site. We were able to get that limit up to 100,000. That may not be adequate enough for some of you, but effectively what we're trying to do here is remove the need for you to have marine cargo insurance to cover your gear from one contract location to the other. And then lower excesses, $750 for burglary, $1,500 for theft. We just wanted to get those excess points down a little bit further so you can get more out of your claim. And this last one, and this is quite a unique addition, business interruption cover. In particular, what we're looking for here is additional increased costs of working. Now, if your scaffold's been installed at a site and for some reason it collapses or falls over, maybe those painters have come in and released some of those anchor points, and that's made the structural integrity of the overall scaffolding a bit weakened, and the scaffold falls. Provided there's enough damage to the scaffolding, so $500 worth of damage or more, that triggers a material damage claim where you can recover the costs of replacing the damaged scaffold, planks, etc. But also now we're aware when that happens, you've got to send a team out to dismantle that gear. You might need a bit more engineering work just to ensure that before you reinstate the gear, any errors or emissions that were uncovered as a result of that collapse are taken care of. Then obviously you have to erect it all again. So you can now have all of those costs covered, the dismantling, re-engineering work, and the reinstallation under a business interruption policy. So it doesn't have to be a business expense anymore. That can be transferred over to the insurer, which is quite a reasonable extension to have included, and has been utilised already by 2 of our high cover clients since we went live in September. Just briefly on the motor, we've got replacement vehicle cover for any vehicles that are 3.5 tonne or less, so cars, utes, vans and the like, for up to 18 months. So if you have a total loss or a major accident in your vehicle that makes it a determined total loss, you get a new vehicle. Same applies for vehicles over 3.5 tonne, so for all of your large trucks, loaders and bits and pieces, up to a maximum of 12 months. Once we hit over that 12 or 18 month point, we then move into a declared value basis. So that's effectively agreed value. So for any vehicles that are over 18 months, up to 5 years below 3.5 tonne, so again, vans, cars, etc., you'll get agreed value. So whatever the amount is that it's insured for on the schedule is what you'd be paid. And same scenario for over 3.5 tonne when those vehicles are from 12 months up to 5 years. We've also got on there a maximum settle amount of 120%. So when we move over to standard insurance settlements, when those vehicles are 5 years plus, normally, let's say you have a vehicle on your schedule for 20 grand and you have a total loss, the insurer will do 2 PAVs, which are pre-accident valuations on like-minded vehicles based on age, make, model and kilometres. And then they'll take the average of that. That will be determined to be the market value, and that's what they'll offer you. So in the event, if you had a truck insured for 20,000 and the market value came in at 24,000, technically under this policy, you would get paid out the 24,000 because you are covered for up to 120%. So we're just trying to write some buffers in there because there's a little bit of crystal ball gazing when you're trying to ascertain the values, and also depending on market forces over the course of 12 months, the values of the vehicles can increase or decrease. So we just wanted to make sure there's a buffer there if they increase. Just briefly, some hoist cover. Any of you that have trucks and vehicles where you've got hoist to help load and unload large piles of scaffolding at one time. If there's any breakdowns or incidents with those hoists, we've got cover for you in there to have those repaired. And we know a lot of you are quite handy when it comes to your vans and bits and pieces. So if you've done any internal fit outs, again, if that truck or van, ute, etc. is damaged beyond repair, there's an extra $10,000 in there for the removal and reinstallation and replacement of any of that internal fit out that maybe was damaged. Now, just briefly moving into the final area, liability. We've got your shrink wrap or encapsulation services insured automatically. So even if you contract that out and another company comes in to do the install, we do know sometimes there can be disputes if the weather envelope is broken between the different companies' insurers around, was it the scaffolder's fault? Have they put the scaffolding too far apart? Was it the shrink wrapper's fault? Did they not install the shrink wrap properly? Whilst all these arguments are going on, nothing's happening on the site. It's delaying out the claim, and your principal or your customers as a result potentially start to get frustrated. So on our side, it doesn't matter where the loss lies. We've got the scaffold or the shrink wrap covered. Your insurer will get that sorted so you keep the job moving and keep your customer happy. Then in the background, they'll figure out where they feel the responsibility lies. So we want to make sure that there's no delay in the contract, or as little delay as possible, because insurers are arguing over liability. We also enforceable undertakings in the event of a major health and safety event. If WorkSafe decide that they want to take an enforceable undertaking approach rather than a fine and penalty, we've got the costs of you completing the enforceable undertaking covered by insurance. And finally, we've got some add-ons here as well. One, environmental liability. A lot of you may not be aware, but things like asbestos is excluded from standard liability insurance policies. So we can have that covered for you. So if by mistake on a contract site, you happen to penetrate a ceiling or an external wall by mistake and there is asbestos there, and then it creates lockdowns, tidy-ups and bits and pieces, we can have all those covered. Also, ship repairers, if you're going out, if you've got contracts with different ports and the likes where you have to go out and do scaffolding when they've got boats out of the waters, vessels out of the waters or in the water for general maintenance. Anything over 10 metres in length isn't covered by standard liability. So again, we can make sure that is covered under your liability through our program. And the airside apron, if you're doing any airside work at airports, again, standard exclusion, but if you just let us know, we make sure that's written into the cover. So in a nutshell, those are the main coverage enhancements that are on there. The other thing, we're working with an insurer, Chubb Insurance, who are providing some extremely competitive group accidental death, accidental injury type options. So as Jason mentioned earlier, a lot of the high cover customers that we've brought on, they've saved a significant amount of premium. We've also been able to add on, say, for example, $100,000 per employee of accidental death cover, and they still maintain premium savings whilst we've improved the cover and added this accidental death cover on. And we've done that because a lot of the feedback is quite a lot of the frontline workers that you have actually out on the contract sites doing the installs, etc. Some of them can be migrants. So this is a really good extension to add on to the policy because it's now going to You can pass it over to the employee's family or estate if it is the worst case scenario and they've got money there for repatriation costs or anything else that goes along with it. Also, in the event of that happening, that's seen in a very positive manner by WorkSafe, and it can have a massive impact on the way that they choose to prosecute, fine, reparations, etc., because they see you've taken steps to protect your employees, especially those import employees. You've got the cost covered for the family, for repatriation costs. So that goes a long way in hopefully minimising any potential health and safety fine that they levy on you, which isn't insured. So obviously that's a business expense. So that really covers it from our side. So over to any questions there. I'll just stop sharing our screen and have a look through to see if anything's come out.
So I do see that we had someone put through just wanting to have income protection insurance covered. So clarity, guys, can you cover off some of the income protection that you offer?
Yeah, okay. Look, income protection is a little more tricky because depends if it's income protection, again, attached to things like just accidents and injuries. It's quite straightforward to achieve. And we've got that program, as I just mentioned, with Chubb set aside that can cover those sorts of things. But when you start looking at income protection for trauma, so that would be potentially things like cancer, for example, terminal cancer that you encounter, you're going through treatment, as a result you can't work and your income needs to be covered. We can provide that, but unfortunately we can't do it on a blanket basis the way we have some of these other coverage enhancements, the accidental death or injury covers, for example, because a lot of that will come down to your own individual health circumstance, your age, how healthy you are, history of other medical illnesses, pre-existing conditions. So whilst we can certainly assist you guys in that area, most insurers would require a health check, which good news is they pay for. So if you're looking for a free health check, let us know. We can go down the path of getting some options. Doesn't mean you have to take the income protection, but yeah, there will be a component of health check related to that. And then naturally, depending on the outcome of that health check, if everything ticks off, that would be reflected in the rates and premiums that they would charge you.
If we were to write it as an employer-funded program, we can cover all the employees, and it can be something as simple as a formula of 2 or 3 times salary.
Yes.
And so that's another way of looking at it.
Again, in that scenario, they'll normally have some blanket caveats. They might say anyone 60 plus, we would need to see a health check beforehand. Anyone with pre-existings, if they want those pre-existings considered to be included in the package that we put together, they might just ask a few more questions of that individual in the first instance.
Excellent.
I would just say, just before we wrap up, we've got all your membership contact information, obviously, through the website. So over the next couple of weeks, we'll be looking to reach out to you all to see if you're interested in getting your own high cover quotation. Now, we're aware that it may not be the most suitable time. So obviously you'll have a due date, could be June, August, etc. So what we'll do, if now's not the right time, if you're willing to share your due date with us, we can get in touch with you closer to that time when you'll be going through that process with your incumbent provider. So we can make the process as low touch and as low maintenance as possible. And also for everyone that gives us a due date over the next 2 weeks while we reach out, you go in the draw to win a $1,000 Prezi card, which will draw on the 23rd of Feb in partnership with SANS, so that we can announce that to you. So hopefully a nice little hook to get you on board, if nothing else.
Fantastic. Thank you, guys. All right, it doesn't look like any other questions have come through, so we're pretty much on time, actually. So sorry for the delay, everyone, in getting started, but we did get there. So thank you for your patience. And I'd just like to wrap up there by thanking you again, Clarity Insurance and Morrison Kent, for joining us today. And we hope that you've all enjoyed learning more about the team and putting some faces to some names. And as Chris said, we'll be sending out an email next Tuesday with this webinar recording and some more information there from Morrison Kent and Clarity Insurance. So thank you for taking time to be part of the session today. We hope that you'll also join us again for any future webinars that we hold. So from the SANS team, ka kite anō.
Thanks, Sakite. Thank you.